All right. Really appreciate you coming and joining me here today. We're going to go through really the business wealth cycle and what you need to do to make sure you can maximize your business profitability and keep it in your pocket. And it's all about growing wealth over the longer term. So this is something I've been working on for a long, long time, and really building and continuing to build my organization so that we can make this happen for our clients. A little bit of background, I've been a CPA for 39 years. I've also been a CFO and CEO of businesses with sales from 10 million to 44 million, okay? I started my career with Deloitte, worked there for about 6 years, and then moved on to be CFO of one of my clients and went through a series probably over a 15-year period of different businesses where I started as a CFO, became CEO, and actually was running several businesses. And after a while of doing that, I really decided to found my own accounting firm because I realized that most accounting firms really are not there to support small and medium business owners, okay? And it became very, very important that, when you sit in the seat of trying to run a business and trying to take care of, everything, including making a profit, but all the employees and everything else in that business, it is very, very challenging. And really the biggest problem I solve is that almost all tax preparers fill in the boxes and do no tax planning whatsoever. Business owners then really lack the guidance to increase their wealth and figure out how to reduce their tax burdens and really keep that money. And the really result is the hard-earned cash goes to the government. Expanding the profitability of your business instead of expanding the profitability of your business and providing for your family's future. I became in this journey a certified tax planner, which is additional training and education to study the secrets of advanced planning to maximize savings and allow you to reinvest in your business and indeed in other businesses. We have found in this whole process and really 4 decades of working with business owners that most business owners don't know their numbers and they find taxes and tax agencies unpleasant. If I had to count the number of times, if I had $1 for every time somebody said they're afraid of the IRS, I'd have a lot more dollars. It's just a lot of people that are really concerned out there. And I also found that if they do know their numbers, they don't always know what they mean, or they don't always know the optimal ways to impact them. We look at numbers in different ways, and obviously seeing so many different types of businesses, we know what's right and we know what's not right in terms of the profitability of the business. Then we find that most business owners turn to accountants for guidance, but unfortunately, a lot of the accountants out there have no interest or knowledge in effective legal tax reduction techniques, or even, quite honestly, in their business. They don't give them advice on how to improve their profits or whatever. For example, I was with a very established restaurant owner yesterday, and we were looking at their numbers, and in the restaurant business, and I'm like, you probably need to adjust your prices. In the restaurant business, really, you want your food and labor to be 50% of sales, right? If you're not there in the 50% sales range, your prices are probably just not accurate, or perhaps some of your costs are off. And what we've also found is that most successful owners know certain things. Most business owners think that you talk to your accountant once a year, perform accounting tasks. It's just a chore, right? And maybe at the end of the year to file your taxes. And then you ask yourself questions like, why am I not growing revenue or profit? Why does it always feel like your operating costs are more and more and more each year? And you try to pinch pennies, or you try to do whatever you can. But successful business owners know that there is a value in a trusted CFO, CPA advisor, and especially one that proactively searches for revenue and profit growth opportunities, provides great business advice, understands how you can use the tax rules to save you money in your business, helps with monthly forecasting for successful revenue growth to position and leverage your firm, and also looks at some budgeting and analysis and optimization that you can do to make more money. And also really uses proactive tax strategies to take the next steps. And there's really a huge misunderstanding out there. Most business owners think their CPA, accountant, tax preparer is saving them money on taxes, but they aren't. They're just preparing the tax return. Then they tell you really how much to pay and when to pay it. The truth is there are really 2 disciplines, tax preparation and tax planning. But the problem is nobody wants to do tax planning. Okay, so many people in my business, and I have this love-hate relationship with the tax field. I hate the fact that they don't do tax planning for their clients. They don't legitimately try to go out and save people money every single time they do a tax return. How do I know this? I'm one of about 1,000 certified tax planners in the United States. It's not hard to get a certified tax planning credential, but I'm one of 1,000 out of 1.2 million people in the United States licensed to prepare taxes with the Internal Revenue Service. That means that 99.93% of tax preparers don't bother to get advanced education in tax planning. And that's unfortunate, right? So, and on top of that, the studies have shown that 23 million businesses in the United States aren't properly structured to take advantage of existing tax laws. So they're literally making billions in donations to the IRS every year. And honestly, in really looking at what we need to do in accounting and tax, we got to have accuracy, right? We got to make sure that the numbers are right, okay? I had another good conversation this morning with another client where there were things being miscoded by his bookkeeper, right? The bookkeeper was saying he couldn't write off his gas and for his vehicle, you know what I mean? And he obviously could, because this guy's out doing sales for the business, right? And I see that all the time. Accuracy means having your books reconciled with your banks and your credit cards. You're not missing any expenses. When business owners don't have good books, they always lose money. I also have business owners that try to run their business on a cash basis, so they don't report anything or don't report all their income to the IRS. Well, those people also lose money too, because they don't know what their costs are. So their prices are never correct, okay? Understanding, they need to understand, once you have your numbers together, you need to understand how you're operating. Another great example is, back in the day, and to a certain extent, this happens today, people used to give their accountants their bank statements, and the accountants would add up the bank statements and tell them what they were. And the way that process would work was that, the business owner would get the bank statement in the mail. He'd leave it on his desk, leave it on the dining room table, have it fall between the seats of his car, and let's say this is the January bank statement. So his accountant calls him up in April and says, "Hey man, where's your stuff?" Right? So he finally gets it to his accountant or bookkeeper in, May, okay? And then that person does all his numbers for January, and he may not get those numbers till June. So if he has an operating problem or a cost issue or is not making money in January and doesn't get the feedback until June, you have February, March, April, and May where you've lost additional money and never had the opportunity to adjust. Really, really important. Understanding, planning. What do we need to do to get these results? Planning is very important because you have to have accuracy, you have to have understanding to really do the planning that you want to do to make the changes we need to make. And then the execution is really kind of translating those plans into operations and into system changes. This is really where it all comes down. And this is really in my years and years of studying, how to create successful business and what people need to do. It comes down to this business wealth cycle. And this is what I call it. And really, quite honestly, business is all about finding out what works, measuring what works, getting the accurate numbers, and then you just do it over and over and over again. That's how easy a profitable business is, really. This is how you have thousands of McDonald's, thousands of Chick-fil-A's, thousands of, Jiffy Lubes, whatever, or gas stations or anything across the country, because people look at their numbers enough to figure out what works and they do it over and over and over again. That's simple. Easiest way to describe business. Figure out what makes money and do it again. Your core tool that you must have as a business owner, right, is really, you have to have efficient measurement systems that produce timely, actionable clarity. If you know that you can make money if you do one thing that makes money, you do it over and over again, and you have the tool to measure it and then put that stuff in place, fantastic. Now you have profit. But here's the problem. Your next step is you need to start saving money on taxes. If you're a sole proprietorship, right, and you're making $100,000 a year, your marginal tax rate is going to be, and let's say you're single, you're looking at 24% federal, you're looking at probably 9% state, 33, and 15.3% self-employment tax. We're looking at almost 48% taxes on $100,000. That's ridiculous, okay? And somebody needs to not be an S Corp or be a C Corp or do other things like that, right? So you've got to have the tools and techniques, and you've got to use every single loophole. I'm going to talk about some of those loopholes in a little bit to make sure that you're minimizing your taxes. Why? Because the money you left over not only supports your family, puts food on the table, does whatever it needs to do, but it also really allows you to reinvest in that business. And your core tool here is short and long-term tax planning to maximize write-offs and facilitate leverage. Now, what do I mean by facilitating that leverage? Okay. It means you need to be able to go borrow money from the banks, right? Because really, if you think about it, right? If you know what works over and over again, what's the best way to get wealthy, right? If you can make 20% on something, you can go borrow money from the banks at 7 or 8, as it's at, let's say 9, and make 10% on the bank's money. Perfect. Now you're leveraging yourself. You make 10% on other people's money, right? And you pay the banks back and you make 10%, and you grow long-term, you grow a business. Again, obviously you're buying assets, and you're going to take some depreciation and everything else like that. And that's where we come down to business investment. See how this is all tied together, right? Your core tool, facilitate leverage. You use that leverage to create more business investment to go back and make more money, doing those things over and over again, right? So you're going to create long-term wealth by investing your profits in appreciating property. Maybe you'll buy a building that will pay for itself, or you'll buy more assets that you can use to create more wealth. Our core tool, the business plan, and your understanding of finances, leverage, and profits. And also looking at directions and trends to emphasize security and profits. And as you build out your business and make your money on your business, you want to look at some solid things that you want to invest in, build assets. A lot of times I like to recommend real estate. A lot of times I like to recommend whole life insurance, because these are really secure investments. The whole life insurance companies have been around for, through the Civil War, right? And people have done a great job in terms of creating an investment portfolio for you. And real estate is a perfect place to be. Real estate is the only place that you can depreciate and write off appreciating assets. Long-term real estate appreciation, 4%, and it's just very, very reliable year after year after year. And the key is you go through this cycle year and year and year, and you build your wealth into what I call the upward wealth spiral, right? Because you got to think about each year you're going around this situation, and your wealth is getting bigger and bigger and bigger as you make more and more money, okay? This is the key. And the truth is, accumulating wealth does not occur in one big hit, right? Grand slams don't win championships, right? It's the base hits that add up over time that make something large. And that's what, people need to think. I mean, we all think short term, right? What are we going to have for dinner? What are we going to have for lunch? What are we going to have for breakfast? But you got to think long term in business and really create a business that's going to work for you, right? And really make sure you are investing in something over the long term, because that's where it really makes a difference. And in business, there's a lot of financial levers to pull. You can increase revenue, decrease your costs, increase your gross profit, decrease operating expenses, increase your net profit. But we got to think about asset protection, building our wealth, looking at long-term business retirement, business valuation, planning for retirement, and really making sure that tax reduction is happening to the best it possibly can. Okay. This is one of the reasons we created positions in our firm called Platinum Advisor. Okay. The Platinum Advisor is both a CPA and a certified tax planner. They work with me every day, and I train them all the time in terms of how to work with their clients and understanding the business. But honestly, I've got a lot of years in it, right? So I just seen a lot of stuff, man. Been through a lot, and I can look at a set of financial statements, and I teach them how to look at financial statements to figure out how we can help these people be better and better and better. And they're there to answer questions, right? They're training to be a proactive partner, and basically What they're there is to be that experienced CFO, CPA, to help you implement the best practices in your financial life on the accounting side and on the tax side. Looking at this business wealth cycle and building this firm out this has been a 20-year journey for me. Okay. And to make this happen, I've really spent a lot of time thinking about this. I mean, really almost all the time. I wanted to build an integrated system that creates success and more than pays for itself every single time. Proven system that works and pays for itself year after year after year. And I'm very, very proud of the fact that every time we do a tax plan, the return on investment is huge. Okay. And when we integrate this tax plan into the details of the bookkeeping, that return on investment becomes bigger and bigger and bigger. Because my goal for all my clients is to generate way more value than they invest in our services. And to do this, we hire and train smart advisors who care about helping clients be successful. And quite honestly, it's just been hard work. We make sure they're degreed accountants who pass certifications, make sure prove their technical competence, like CPAs, enrolled agents, certified tax planners, and we give them the support of the best technology we can find. We switched in 2015 to only cloud-based systems because they're much more efficient. They have greater integration than the desktop approaches and the old approaches that were out there, and give us all the tools we need to help you. And what we do is we have the accountants and bookkeepers do the process, right? They process the transactions, get the bills paid, talk to clients, talk to vendors. They ensure timely and accurate financial statements that go to the Platinum Advisor to do the advising and work with a proactive analysis for future tax and financial planning decisions. No other CPA firm is organized this way. All other CPA firms have silos of accounting, the audit group, the tax group. Very few even do client accounting services like we do. We call it CAS, client accounting services. Very few people do it that way. And I think this is the future of the profession, and people haven't quite caught up because they don't understand the business wealth cycle and they don't understand why it's important. Client accounting services, tax advisory service, and we span the gap and integrate these two. We can do basic monthly accounting. We can do what we call FX, which is highly integrated, accounting for people that need more detailed understanding of their margins. We can do complete outsourcing with CFO, doing forward forecasting and stuff like that. We have several nonprofits. We've worked in this direction to help them maximize their net worth, and then and have the assets to really continue to expand their business. And then tax, obviously, tax planning, implementation, quarterlies, preparation. These are all, we're building and developing world-class reporting to help people look at their numbers every month and make sure they can interpret the results, understand if their profits are going up or down. We achieved this. We looked at industry analysis sorry about that. We do the industry analysis like I talked about just a few minutes ago on the restaurant side. How to run a successful restaurant. You got to have your sales, you got to have your food costs and labor costs in line. Those are the variables that are going to make you money. And then forecasting growth and planning looking for any potential roadblocks, possible issues. How we help our clients with taxes. Number one, we make sure they're properly structured to minimize taxes. I can't tell you the number of times I've seen people with S corporations pushing millions of dollars into their personal return and paying maximum tax rates, when a C corporation should be considered, right? And then I always get the same reaction when people go back to their CPA and say one thing to them, say C corporation. They go, "Oh my God, double taxation." Well, that's just a load of crap. C corps are not required to have double taxation. You can use them in so many creative ways, a combination of LLCs and everything. That can be your investment vehicle. And the C Corp tax rates are 21% and 8.87 in California, right? So taking consideration the various forms of asset protection, we look at how we can set that up with the different types of entities, look for ongoing implementation of strategies to maximize tax savings, and help you manage your quarterly estimates. We try to assess all of this as we do continuous tax planning and tax management. retirement, deductions, legal entity structure, advising you on deductions and what you can write off or not. This is one of the questions I get from people all the time. What can I do? What can I write off? Whatever. And so many bookkeepers and accountants out there will say no instead of telling you how. It's not about the no, it's about the how. Because a lot of things you can write off if you do it right, if you create the right structures. Insurance, loopholes, tax cuts and jobs act, niche specific strategies. Like another one, restaurant business, the tips credit that we make sure we capture both on the accounting side and the tax side, right? Any new tax policies coming out, we look at those and see what we can do. The bottom line is business ownership is the best legal tax shelter in America. There's no other place you can achieve the level of tax savings than owning a business, right? If you have a W-2, you can deduct your mortgage interest, some modest retirement, some charitable deductions, state taxes up to $10,000. But at high annual incomes, these get phased out as well. Business deductions, real estate depreciation, equipment depreciation, all taxes are deductible, not just $10,000. Travel, automobile, kids, retirement plans, multiple retirement plans, deferred comp, meals, all interest, home office, Roth IRA, Section 162, which Section 162 can be a huge Roth IRA. You're not limited to $6,000 or $7,000 a year. Educational deductions, deferred comp, family endowment strategies, business structures, fringe benefits, accountable plans, Augusta rule, all of these the MERPs, the QEAAPs, the defined benefit plans, 1031 exchange, cost segregation. Obviously, we had the credits that are over now with the ERC was a credit over, but we still have the WOTC credit, the FFCRA, and R&D tax credits. I've run into so many people, particularly in the software business these days, that never took any R&D, and we're helping them get R&D tax credits, which could be 15% of their expenditures. Not only deducting the taxes, but getting a credit back on their taxes for those expenses, installment sales, and all of their necessary reasonable expenses. So many different things you can do. I want to talk about a couple of clients I've worked with over a number of years. Meet Larry. Larry is a food service client, and when I first met with him, he went from 2 locations, and we grew him to 5 locations. He went from making about $100,000 a year to over $1 million, right? We helped him solve structural issues and succession planning. We're now in the process of helping him really go through a succession to his next generation of this business, and minimizing taxes in that effect. So he will be able to transfer this to the next generation without provide for his retirement and won't have to pay any capital gains taxes on this. He acquired multiple buildings and now has excess of $5 million in commercial real estate holdings. We helped him obtain financing. We negotiated with him through the banks and gave them all the tax returns and financials necessary. He's paid minimal taxes, right? A lot of that is because the investments we've made in his long-term future, okay? Rex is another one I started with. He had a small used large plot on the worst street in Stockton, and he actually hated his business. I said, Rex, you should be in real estate, right? And now he owns pretty much a full block of one of the most successful parts of his city, right? He's got multiple investments. He's a successful developer, and has just built up his wealth through really working the real estate. He's respected county-wide political influences, and again, has paid minimal taxes. And all of this money has gone back to reach his future. Now, Sonny was a successful dentist paying obscene taxes when I met him, working hard in 2 different practices, and we've been coaching him on new investments. And in fact, I just met with Sonny again today, and his real estate empire that he's expanding is really very, very impressive. Again, he's still running his dental practice, but he had the margins to start hiring associates, so he didn't have to stand over somebody's mouth all the time, right? And now he's investing in his future and his family's future through real estate development and real estate ownership. Again, he's building custom homes. He owns multiple buildings. He's working less and paying minimal taxes. Again, that whole structure and strategy is really, really important. I want to show you what our tax planning process is, okay? But before I do that, I want to stress that no one in the business does things the way we do. Okay. No one embraces this business wealth cycle like we do. And I know that because I see other people's tax returns. I know what the business is because I've been in this business for 40 years, and no one embraces things like we do. And it is so critical that we have the information and we follow that business wealth cycle to create money, create long-term wealth for you. So the tax planning process, and how do we get started with our clients? We get started by saving them money on taxes. That's number one, right? We get their last 2 years' tax returns. We go through and we put these on a spreadsheet to look at what their profits were, what their depreciable assets were, and look for their opportunities, right? Then what we do is we look to how this money is flowing to their personal tax return, right? And what we can do. This guy had almost $1 million flowing to personal tax return. He was paying almost $300,000 in taxes as a result, a 48% marginal tax rate. So when we understand these things, we can figure out how we can save money for this person. And then we lined up some basic plans. We have a deferred comp plan, the Augusta rule, which lets you write off, pay for home rental for meetings, your home office deductions, home administrative office declaration, more meals and travel. Hiring your kids, you can pay your kids $14,600 a year, and it's tax free to them. And there was just the depreciation they did was wrong. They didn't do any cost seg and everything like this. And we also looked at switching them to a C corp. Net savings $293,000 of taxes. Net savings was $225,000. That's over 80% of their tax bill was gone, right? So that's really the process we look through. And the very first step is to sit down with our clients and look at their tax returns and figure out their current situation and goals and strategize on how we can look through and monitor like the key areas, right? Obviously, we have these financial levers we talked about before. We want to look at how we can increase their revenue, how we can get their gross profit to go up, how we can increase their net profit, and then really increase their net worth through tax planning. Obviously, if somebody's got to pay $225,000 less in taxes, right, every year, and they reinvest that in their businesses, just in a few years, that's additional $1 million to the bottom line, right? And additional $1 million to your wealth. And we've organized our servicings for CAS Lite, basic bookkeeping, CAS, which is much more extensive and really working on the budget process. We also have a CAS CFO process, and then CAS plus tax. And you can see everything: bank reconciliations, review APAR, integrated virtual automatic file cabinet. This is, we use a tool called HubDoc, right? Which basically, this is critical right here. Because the way the Internal Revenue Service audits you every time you get audited, do you know what they ask for? Show me all the receipts that add up to the expenses on your tax return, right? And, bank statements are not good enough. Your credit card statements are not good enough. They want the receipts. Why did they ask this question? They ask it because they've been doing this way for 100 years, right? And they rarely change. But they also ask this question because they don't think you've saved your receipts. But if you use a cloud-based tool like HubDoc, you take a picture of those receipts, all you have to do is take the picture and get it into HubDoc. It automatically sorts it and reads it and sorts it and files it by date, by vendor. We're undergoing an audit right now where they're questioning, $900,000 of, expenses cost of goods sold for one of our clients. Guess what? Our clients was very religious about HubDoc. Do you know what we did to the IRS? We downloaded every single receipt and gave it to them on a flash drive. Here you go. And what did the IRS do? Whoa, okay, you got all your stuff. We're going to give up on this tactic, right? Because this is a tactic they have to get money out of people, right? And that's what IRS auditors are trained to do, get money out of people. And that's what they do. So this is very important. And we have ongoing meeting cadences. We have onboarding and transition. We can do 12 months forecasting, budgets and budget comparisons, planning. And as we get into CFO, planning, dashboards, cash flow, complementary assistant. And we like to do tax preparation along with the plan, because now we can make sure your tax savings happen. I've seen so many people do tax planning with different people, and then they go to their tax preparer who's not familiar with the strategies that are being used, and they're like, you can't do that. That's a red flag. I've recommended people paying their kids before, which is perfectly legal, and certainly supported by tax law since the 1920s, quite honestly. Any child above age 7 can be paid out of the business, okay? And if you handle it right through a family management company, you don't even need to pay Social Security for those kids up until they're 18. And that's been a part of case law and a part of tax laws, I don't know, almost 100 years, right? Maybe 90 years, right? So, but we like to make sure that your actual filings match the tax plan. It's very, very important because that's really where you save money, right? Our 30-day implementation, we review the books, assess the need to do the setup and cleanup, get a system together for monthly reviews, and validate the completeness and accuracy of the financial records. 12 months, our team reviews accounts each week. We meet to do strategic planning with your platinum advisor, review goals for the last month, set goals for new months, and so forth and so on. It's just an ongoing process. And this process, quite honestly, is designed after a CFO, okay? All large businesses and all SEC reporting businesses, all public companies are required to have a CFO. Why do you think that is? It's because they want these companies, the stock exchange, the whole capital system of the United States is based on these companies will make money. And these CFOs that are in these public companies can be held, liable if the numbers aren't right. Right? It's the same reason why the public companies are audited. Now, this process that we have and that we've integrated and that we've spent of the last 20 years developing saves you money, okay? And really what I do is I offer to sell people $100 bills for 20 bucks. When you look at the all-in costs and when you look at the all-in savings, right? And if I offered to sell you $100 bills for 20 bucks, you'd buy. There's no question, right? Hell yes, you would. That's the way it would happen, right? And what we're willing to do to anybody who's interested, right, is to offer a free assessment of taxes. We'll go through and do that analysis if you get us the last 2 years tax returns. We have a sales contact, sales@peterholtzcpa.com, right? And I'm sure one of my team members will go ahead and email it out to all the people that signed up to the webinar. But if you want to do this, we'll get you a secure portal for your business to upload your last 2 years tax returns. And we will actually go through and do this analysis for you, the one that I showed you right here. We'll do this analysis for you to find you ways to save money. Worst case scenario, I mean, to me, this is a no-brainer. Like first of all, if you don't want to do this, you don't want to buy $100 bills for 20 bucks, which is dumb, okay? And then worst case scenario, you don't have to pay the 20 bucks. I'll show you what tax savings you could do, right? We'll do this full tax analysis for you, okay? If you upload your tax returns. We are, I've been a CPA for 40 years, right? My license is good. It's because we're responsible and we do good work for people, okay? So we do the analysis for you. After we do this, upload secure product, and then we join us for a Zoom call. We'll review the results with you and like what it would cost for us to do everything to help you, and to help you with your business. I am very passionate about small and medium businesses. I'm dedicated to helping them save money. I have spent so many hours and so many days racking my brain when there's issues out there that people need to work with. And quite honestly, there has never been a business problem that I can't solve. Never seen it, okay? And it's a natural talent that's been honed over 40 years of looking at different businesses. And this is one of the reasons we say we're made for you. Because it took me 20 years of hard work and determination and stubbornness to try to build this system and refine this system that really works for small business owners. And I shared with you 3 little success stories. There are many, many, many others. I have people that we have their financial plans out for year after year after year, and I know the next 3 years what they're going to do to minimize their taxes and create their investment. And then I have people that look at those people that see the plans and they're like, man, I want to be like him, or I want to be like her, because look at what they're doing. They're growing, they're becoming more successful. How do you do that? And then what happens is they say, well, you need to go talk to Peter. You need to go talk to Peter Holtz CPA, because these are the guys that are really helping me do it. And I'm really determined that we continue to improve and make that happen. You know, we're human beings, right? We're not going to get everything right the first time, but the good news is our hit rate. I know in my heart of hearts that we are better than anybody else in the business, and I know in my heart of hearts, and in terms of looking into the eyes of all my people, that they are working hard to make everything happen at the best we possibly can. So it's been an exciting growth target. We are now in growing this firm and creating this success for our clients. We're now one of the top 400 CPA firms in the United States. Okay, we started from zero. Okay, and to do that, basically we've ridden a path of success to make that happen. Okay, and we don't get growth, and we don't get things. We don't get the privilege of working with our clients unless we do a great job year after year after year. So that's my presentation. We got a few minutes left. If anybody has any questions, feel free to ask. I think what I can do is that is the messaging turned on so people can ask questions? I'm not sure, EJ, if that's you or running it, or if who's on.
Yep, everyone can send a message.
Okay, everything's turned on. Okay, so if anybody has any questions, feel free to ask. We're going to be doing webinars on some specific tax planning techniques, probably every couple of weeks, to give people an understanding for how things go and what they can do. But you can feel free to ask if you have any questions. If not, we will let everybody go. We'll give it a couple of minutes. Okay, but if not, we can let everybody go and enjoy the Memorial Day weekend. I hope. I mean, weather where we are is going to be very nice, and I hope everybody has a good time.
Hey, Peter, this is Ben. How's it going?
Ben, how are you?
Good. How's your day going?
Good.
Yeah. Hey, I have a quick question. Like recently I started doing real estate as like an agent.
Yeah.
And I'm about to get my first commission from my first sale. And
Good.
How do you think I should receive that commission? Should I receive it into like an LLC or directly on my name?
Yeah, absolutely. I mean, you're going to continue developing this process, right? Because you just absolutely. Let's take it to the LLC. And what you do is, depending on how much money you make this year or next, we can figure out if you need to be a S corp or a C corp or whatever that LLC. LLC is a really interesting entities because they can be flipped. You can make a declaration at the end of the year, even do it in the following year using a late declaration to say, hey, I want this LLC to be taxed as an S corp, or I want this LLC to be taxed as a C corp, or I'm going to tax as a single member LLC. It all depends. And I really like doing that, especially for you getting started in business, because we're also going to want to, let's say you have other things going on, or your wife has got a W-2 or whatever, and you have losses in your first year of business, which is common, most people do. Or we take, for example, we put your car through and do depreciation on your vehicle, or other assets that you may have we depreciate that we could use to offset against your W-2 income if we do it as a single member LLC. But you may have making money other places. We may keep you as an S corp or a C corp or whatever. It all depends. And that's what I really love about tax planning, honestly, because it's always a puzzle, right? It's always something where we can do different things depending on the year, right? And tax planning is not something you can do just once. It changes as your income changes every year. But yeah, definitely, Ben, let's start with us an LLC.
Hey Peter, this is Jerry. I have a question.
Jerry, what's up, man?
Hey, question for you. Some of my real estate properties are held in LLC.
Yep.
You're very familiar, of course, with my files. Lately, I've been thinking about kind of hearing things here and there. I wanted to kind of understand better. Is holding him in an LLC better, or holding him in a family trust better? Are there any differences, advantages or disadvantages, one over the other? What do you recommend on that?
I mean, there's so many different structures when you get to a significant real estate portfolio. Right now, for your situation, I'm not sure if family trust is. I mean, obviously, you want to have what's called your revocable trust, right? Because the revocable trust is basically a non-existent entity until you pass, but it is the entity that keeps you out of probate. So yes, you definitely want to have the revocable trust. And so there's two types of trust. You have the revocable trust, which is basically your estate planning entity. And an irrevocable trust is a trust you really set up to, manage a business or whatever, right? And irrevocable trusts have a pretty high tax rate, right? They started about 34%, right? So on a federal basis, right? So it's not always a good option unless you're making a lot of money and you want to set that up outside in a tax-free state. A lot of high-end wealthy people do trusts like that, where that trust is being taxed in a non-tax state and they're avoiding state income taxes, right? And it becomes this separate entity that's not really has residency in a particular state. And that may be a place where you get to. Right now, I think we're looking at your real estate harvesting depreciation and doing other things like that is, helping you save a lot of money in taxes. But I think the LLCs are probably a good idea until we get that portfolio up into the range that we want to get it up to. Once you're there and in like the big money is there, man, we'll take a look at what we need to do.
I think this is something that I probably forgot to even mention to you, because I've had it and I never really kind of put it aside. I do have a revocable trust.
Yeah, you should.
Revocable
trusts are an estate planning tool. And really, they're great things because it also lays out like who's going to take care of your kids, your minor kids, and who's going to get what. So revocable trusts are pretty important, and you want to make sure they're there. And it's really essentially like a will, but it also preserves, keeps you out of probate. It also, identifies your assets, so very useful. Because when people pass, when people pass, we go through the estate planning process, right? Where all the assets take a step up in basis. They get marked to market, okay? And because what the federal government is trying to do in taking that step up in basis is they're trying to assess whether or not you need to pay estate taxes, okay? Right now, as of this moment, the estate tax limitation is like 12.9 million each. So husband and wife have $12.9 million of exemption. So you don't have, on the first 26 million, for a round number, you don't have to pay estate taxes. But if your estate is more than 26 million, you're going to pay 46% estate tax. Which, estate taxes are terrible because they're taxing stuff they already taxed before, right? So we want to make sure that, you look at that. And here's the other issue, though. We may be coming up to something that we need to address because in 2026, the estate exemption goes from 26 million down, 12.9 million per person down to about 6 million. Right? So we're going to have a big issue with quite a few clients, that have real estate, that have businesses and other things like that, that we may want to think about different estate planning options, right? Through really, I think through 2024 and 2025, we need to look at that. However, it all depends, because this is basically the sunset of the Trump tax law that was passed in 2017, and that may get extended. You know what I mean? We don't know. That $12.9 billion limitation might get extended, but also the other, however, is that the government wants money. Okay, they always want money. So we got to look at that as we move forward, and that's again part of the ongoing, really, tax planning effort. You know what I mean? Just to make sure we look at everything and say, "Oof, man, I'm a little bit worried of whether or not we might hit that limitation in 2026."
Thank you, Peter.
You're welcome. But yeah, it's a good thing. Jerry, I'm really glad you have that revocable trust, because it's important from, to avoid probate, right? So, and it really doesn't become a taxable entity, because it's like ignored until somebody passes. Then it becomes a taxable entity, and you got to file a separate tax return for it.
And real quick, guys, I just want to shout out to Peter's office. I have been with them for years. This is year number 2 going with them, and I am learning so much. And I've been doing a lot of business. I've been having a lot of things going on in the past with other, I don't want to use CPA, but accounting firms. But with Peter Holtz firm, there's so much that I'm learning. There's so much, there's so much going on that should have been done before with me. But again, thank you, Peter.
You're welcome. Thank you, Jerry, for that. And that's what we like to do. Honestly, we like to educate people and help people understand. Because it's like when we sit down and talk to people about their tax plans and stuff, believe it or not, everybody that we work with gets more educated, right? And learns more stuff. And then as you're going around, it really, that whole financial acumen of our clients expands, and they start identifying more opportunities. And that's really how some of the guys that, have had long-term success with us, it's like, I remember when I was talking to Sonny, I remember when he was first telling me about these, I'm thinking about doing these houses. And I'm like, dude, because he had a partnership with a contractor. And I said, dude, do that. All you got to do is write checks, and you make an extra 6 figures a year for writing checks. I would do that all the time. You know what I mean? Anyway, so it all depends on this. Again, identifying the techniques and strategies that can make you stronger and better is really, really important. All right, so anybody wants to reach out, sales@peterholtzcpa.com. Reach out a quick note that will get you a secure portal, upload your taxes. And like I said, the worst thing that could ever happen to you is the best thing that could happen to you is you get $100 bills for $20. That's good. If you can find a better return on that, you need to tell me, because I'm going to go buy $100 bills for $20. Okay. And the worst thing that's going to happen to you is we sat down, we do this analysis, and said, hey, everything is perfect, and I can't save you any money. But quite honestly, it's never happened, guys. Never happened. Thank you everybody for listening. I really appreciate it. And we're going to do similar webinars and talk about different tax techniques every couple weeks. And look forward to seeing some of you again. And again, have a great Memorial Day weekend. Everybody have a great time.
Thank you.
Bye now, guys.